Fantom, is now the right time to buy? Is it going to moon, or do we need to take a few other things into consideration when it comes from a technical standpoint? Probabilities, never certainties. Well, today we are going to look at the up-to-date information. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. Now with Fantom, our last piece of analysis has been on point. On point. We did a video on October 9th. If you want to see it, just click. The video is right there. We did a deep dive. And what we said, and we need to emphasize this, is this looks like we're making a wave 1, 2, 3. And then this wave 3 is breaking down into a 1, 2, 3, 4, 5 wave structure. And we can pinpoint where is it likely to end from a psychological buying and selling behavior point of view. Then we did the follow-up video on Jan 12th. And oh my Lord, it was pretty much bang on. We hit that zone and the price came right the way back down. Right the way back down. So the whole point of this video here, if we just go back one slide, if it lets me, is it says Fantom has gone parabolic. Are you feeling the FOMO, fear of missing out? Because it was going like literally vertical. This is where most people lose money because most people tend to buy at the top and sell at the bottom. We want to do the reverse. How can you avoid buying when the markets is all this panic buying going on? We want to be buying down here and selling up here. That's absolutely key when we're looking at this. So we pegged it, pretty much bang on. Look at that. It just came right away back down. And this was all the way we did this, by the way, we did Fibonacci ratios, your price ratios. We had Fibonacci time that really helped us. We had some momentum indicators, which I cover in the video, but we also got these patterns. And when these coincide, there's a very high probability that we're going to get a trend reversal. So therefore, this will be the best time to be taking profits and avoid buying, right? Because sometimes it's just avoid buying at the wrong time, and then the price came right the way down. And this is what I cover time and time again. You'll see it time and time again. And right now, I got something special. We got a free Elliott and Fibonacci Masterclass. Is in the link below. But our course, I got a full in-depth course, which we're doing a 90% discount. Normally it's $997. You're getting it for £97, where I break this down. How did we peg the Fantom top? We cover the Fibonacci part. We've covered Elliott waves, the foundation, the intermediate, the advanced, broken down into 3 to 5 minute lessons. And we just really kind of pull it all together. So then when you see a chart, you no longer just see these random lines. You're seeing the psychology, the mass herd psychology of buying and selling behavior. So one of the other things we did with Fantom, we did a follow-up on that Jan 12th video. We said, okay, what is it looking like now? We said, okay, that pullback was this. We said, because it's in an ABC structure, it looks like a wave 4. Again, I covered this in the masterclass. I'll break it down. And we said what we should anticipate now is a final wave 5 and a wave 5 price zone, right? Again, what was the title? How to take profits at 100x, sell at the top, don't give your hard-earned profits back to the market. So that was the title of this video, right? The title of the video, important, because again, what do most people do? They buy sometimes in a good, healthy point, and hopefully they're expecting, the price just to keep going up. But we want to project in advance high probability price zones, resistance zones, where we go, at least take some profits, money off the table. So if you're being aggressive with your targets, at least you get your money back in the pocket. So if the market does reverse, you've banked your money back in your pocket and you're not losing. And then you can fight another day. So what happened with this one? Well, what we said in the video, and again, you can watch the video. This is the Jan 12th video. And again, it'll just be up there. What you can do, and we said this, is you can trail your stop loss. What we said is this is potentially going to be the high, or we might make another high over here. We don't know, but the momentum was still up on the weekly and the daily as well. So what I said in the video, literally, rather than just selling at a fixed point, is trail your stop loss on a one bar low. And each candlestick, these are candlesticks, these represent a bar, and literally just one bar low. And what will happen is if the market continues to move up, because no one knows how far it's going to move up, and it just moves up again, you just one bar low, and then eventually the market will reverse, and then you've maximized how much you're capturing from the market. That's what we said in the video. And then what happened with this? So this was the final 1 bar low. We would have got stopped out and you would have captured a lot of the market. So if you bought in this zone, wherever it was, the main thing is that you're selling near the top. It's hard to sell right at the top, but you can sell near the top knowing Elliott wave, Fibonacci, momentum indicators, Fibonacci price. And here we would have got stopped out with this red bar. And then what did the price do? Because a lot of people won't sell, right? And for whatever reason. And then this happens. And then all of a sudden, you've given all that hard-earned profit back to the market by holding all the way down here. And this is what I'm trying to get across. We can do probabilities, but never certainties. But when I say probabilities, what we're looking for is a confluence of events. We're looking at Fibonacci price. So Fibonacci price ratios, where it's typical buying and selling behavior, Elliott wave patterns, which is wave structures, which is all again about psychology of the markets, combined with some momentum indicators. And then we got 3 or 4 pieces of information telling us what's very likely to occur next. And if we act consistently with an edge in our favor, that means we have a higher probability of winning. So probabilities, never certainties. So what we're going to do next is, again, I got this amazing discount. I think it's phenomenal. Like if you take my course, we're getting rampant, amazing feedback from the course because it's broken down with Elliott waves, the foundation, the intermediate, the advanced. You can do it at your own pace, a one-off payment, video on demand, pause, rewind, rewatch the lessons. You can pull up a new chart and go, okay, I need to remind myself, how do I do multiple degrees of counts? You go into the Elliott wave lesson and you just kind of pull it up again. It's in the link below. I don't know how long we're going to do this, but it's £97 for the full course, broken down, in depth. It took me a lot of time to simplify this, so enjoy it. But take the free Elliott wave and Fibonacci masterclass first so you can get a flavor of what I'm talking about. It's absolutely free. The masterclass is free, and at the end, you have an opportunity to buy the course at £97. So what we're going to do next is we are going to jump into a live chart with Fantom. We're going to do a live analysis, up to date. What can we anticipate next with Fantom? So let me just dive in. So this is now the chart of Fantom. I've got some old lines that I just want to get rid of. I think I just want to get rid of these. So now what we're saying with Fantom, let me just reset this. I just want to pull it in like so. Is after a 5-way sequence, I cover this in the course and the masterclass, is after a 5-way sequence, 1, 2, 3, 4, 5, right? In fact, let me do it like this. Let's do it like this. I just want to show you something, right? Because the markets are always contracting and expanding, right? So what we got here with Fantom is a 5-wave sequence, 1, 2, 3, 4, 5, back in May 2021. And then we've got this correction, not a very clean correction, but it's an A, B, C. We know this in hindsight, so we know this, right? After you get a wave 1 and a wave 2, a 1, 2, 3, 4, 5 and a correction, ignore this 2 for a second. What we want to do is then go, okay, we've got, let me just do it like this, because this is important, because we're going to see this happen on a macro scale now. Let's just call this a wave 1, 2, 3, 4, 5. And let's just call this, it's not the cleanest of ABCs, but ABC, right? So we've got this ABC structure, right? Move up, move down. Then what happens? Well, it tends to repeat again, but on a more macro degree. So what we then do is we say, okay, we're now anticipating the next 5-wave sequence. So what we literally do is we go, okay, this is now called a wave 1 and a wave 2. And now we're expecting the next 5-wave sequence. And now it's a 1, 2, and then a 3. So that's what we got. We got a nice wave 3. Like so. And again, what did it break down into? It broke down into a pretty clean 1, 2, 3, 4, 5. Right? That's how I'm seeing it. A 1, 2, 3, 4, a very overextended wave 5, 3. And then we expect, what do we expect next? A 3-wave sequence, but in a macro degree wave cycle. Again, if this is new to you, in the Fibonacci Masterclass, I cover multiple degrees of counts, but this lets us have a real solid context of the market buying and selling behavior, what's happening over here. What do we anticipate next? A 3-wave structure. Again, if I just double click on it, A, B, C. But then we expect the next 5-wave sequence after a 3-wave structure, but in the macro degree context now, it's a 5-wave structure of a wave 5. So what that means is we can really break this down and understand with high probability that this 1, 2, 3, 4, 5, but now we've got this whole full sequence of a 5-wave structure. This is, I'm simplifying it, but this is advanced stuff. Most people have no idea about this. So now we've got this 1, 2, 3, 4, 5, but now it's complete. The 5-wave structure is complete, right? So now we can ignore the intermediate wave counts and we go, okay, after a full 5-wave structure, what should we anticipate? 3, right? The next 3 A, B, C correction. That's what we're going to focus on. You know, we're gonna actually ignore the fundamentals. You're a madman. Do you know what's happening with Fantom? Do you know the news announcements? Do you know the release dates? Do you know the partnerships? I go, look, most markets, not just crypto, is based on speculation. Fear, uncertainty, and doubt, fear of missing out, optimism and pessimism, greed and, fear and greed. And really, once you can get your head around, that's what drives the markets. All of a sudden, you can actually ignore the fundamentals when you're doing pure technicals, especially when there's a lot of volume. Fantom's a big project. There's a lot of volume in Fantom, millions and millions and millions of dollars being traded every single day. So what we're going to finish on today, with high probability, we now the data is live, right? This is live. This is today. This is where the price is. And I'm just going to forget this is Fantom for a second. Just forget it. Just forget that it's Fantom. It's like, but I'm a Fantom fan. I go, brilliant. But just put your emotions to the side, put your biases to the side. At the end of the day, you want to make money with supporting this project, or whether you love the project, you don't know the project. At the end of the day, you're looking to increase the probability of increasing your financial health. That's the key thing here. So what we're going to do, we're going to do a couple of things. First of all, what we're anticipating after a 5-wave sequence, what's the anticipation, what's the thesis, what's the thinking, what's the business analysis from a price projection, we're looking at price. Right, after a 5-wave sequence, I expect an A, I expect a B, and I expect a C. A minimum of an ABC zigzag. That's the best thing to just analyze, to say that's what we're anticipating, right? Just forget everything else. That's what we're anticipating. Yeah, but I go, look, we're doing pure technicals here. Pure technicals. What about the latest news announcement? What about, look, that's all baked in, buying and selling behavior. So let's just forget everything and go, this is what we're focused on. So now what I'm going to do is what I teach in the course, what I teach in the masterclass. I'm just going to do simple ABC pattern, price, time, and momentum projections. Technical analysis, pure technical analysis. And the challenge is for you to be able to follow and live by the technical analysis, regardless of the news. That's the challenge. Because when you listen to the news and you listen to the announcements and you listen to the fear, uncertainty, and doubt, or the promotions, sometimes, especially with a big project like this, it can skew your belief in the technicals. So here we're just doing pure technicals. So okay, I'm going to start with what I love is macro. What I mean by macro is we got a wave 1. This is what we call a wave 1, by the way, like a 5-wave sequence of a wave 1. Let me just make that clearer. Let me make this clear. This is the biggest the text goes, so let me just make it green. So we got it clear that we're calling this a macro wave 1. In fact, what I like to do actually, because we've got a 5-wave sequence here, let me just delete these numbers. And what we can do is, we don't need these micro counts. What we can do is just keep it nice and clean. I love keeping the charts nice and clean, right? Just so it's really obvious of what our thinking is right now. Right, and then what I want is to have this as a primary count. Primary, bang, it's nice and clear, pretty clean. Well, if it helps you, you can actually double click on these numbers and have the wave structure there. So it kind of draws the lines for you. So you can see your thinking, because when you come back to your chart later on, you might, whatever helps you. But for us, this is fine. All right, I'm happy with that. Now what I want to do is I want to do a retracement. Okay, for this wave 1, where does a wave 2 macro typically retrace to? That's what we're going to do. So we click on this fib retracement tool. We're going to go, I'm just measuring the low to the high. Typical wave 2 ratios. Again, if don't worry about remembering these, if you got the course, it's all broken down. So these are the 3 typical ratios. 50% is a minimum. So we haven't reached the minimum price projection yet. Also, what we want to take into account is, I'm going to just get out of this chart. I'm going to go to the top left. We got something called the weekly momentum. One of the reasons why I'm quite confident is sideways to down still is because the blue line on this momentum indicator called the stochastics RSI is pointing downwards. And look how clean it's been measuring has been lining up with these waves, especially on the downside. Look at this downside movement and this downside movement. So we can pretty much conclude that the following momentum cycles are probably going to stay consistent. So the weekly momentum is down. So it's easy for us to go, okay, if we're looking to do anything with this market, with Fantom, it's sideways to down. That's our anticipation. So we never want to go against the trend. The trend is your friend. Ride it until its end, until it reaches its bend. Right, bang. Next, what I would like to do is, let me just go here. Let me just go here. So we got this. I'm going to keep it quite very macro right now. Very macro. I want to do a simple time analysis, right? If you just believe in technicals, what we're saying here with this time, this is a tool called trend-based fib time. We can take the beginning of this whole wave structure and the end of wave one was what we're calling a wave one. I'm going to double click. The absolute minimum time is 38.2. Most common is 50%, and maximum, typical common maximum is 100%. What I just did there, and it's going to give us valuable information to be patient for a high probability setup, but also to manage your expectations over the coming months, is what we said is this wave structure, this from here to here, how long did it take? Right, we literally just we just measured this, and then what we said is we're going to take 38.2% of this, and it just projects it forward, which is what this line is. We're going to take 50% of this and project it forward, which is what this blue line is, and the red line is 100%. Basically, this projected forward from here is that line. That's what it is. But these are psychological. It's like this. That's the way these ratios show up in human nature time and time again. And what Ralph Nelson Elliott figured out with a few other individuals and other people who have built upon this work is that these ratios show again in markets. You know, where stock markets, bond markets, cryptocurrency markets. Obviously, crypto is only 12 years young. So now, if I'm looking to buy Fantom, I'm not looking to. Now, it doesn't mean we're right. It's just we're talking about probabilities. Because is it possible that this can happen? Absolutely. You know, absolutely. And then we have to reevaluate. That's always a possibility, right? But the probabilities state that right now we should always expect minimum of 3 waves. Looks like the beginning of the first. If we do get a movement to the upside, more likely to be a wave B of an ABC correction for a wave 2. So don't be fooled, is what I'm saying, unless we see a break above this high. And then we should get at least one final leg down. One final leg down to finish off in this region. So right now, you know, unless you're looking to just trade this position, this point over here, this wave over here, this wave B, on the next weekly bullish reversal, I would be patient for that. I would wait. Even if you miss the train, that's okay. Just wait for the probabilities. If you already hold Fantom and it's been these wild swings, I would wait for this wave B. And if you are looking to, you know, bank some profits and you haven't over here, I would look for this. But then if you're looking to buy for the first time, I would literally be patient. Wait for this wave structure to unfold. And if it does do this ABC structure, then you want to look for a very high probability setup. But this is what I'm seeing for Fantom. I'm going to pop this wave 1. I'm going to just copy and paste it down here and say what I'm anticipating is a wave 2. That's it. There you go. That's the Fantom analysis. You know, so this, if it does this, just be mindful. I don't think it's going to be the continuation. Probability would state that we're in a correction right now, and it's a wave 2 macro correction. That means sideways to down until the date. The date would be, where is the date? 1st of June, early June to possibly even July, right? Hey, look, it is what it is. We're just, sometimes it's difficult because there's so much information. There's news, there's the whole market, there's Bitcoin, you know, and it's trying to kind of figure this out by going, look, just according to pure technicals, it might turn into a complex correction. The wave 2, we don't know. But right now, Fantom, I go, no, thank you. I think there's other opportunities out there that's looking like it's more in this position right now as a wave 2 low. And those, I think, are going to be a much better opportunity right now. But just based on pure probability, pure technicals, we're looking at momentum. We want that in our favor. Right now, it's not in our favor. Momentum is pointing down. We want pattern. Well, pattern states ABC correction for a wave 2. So again, until we are at this wave C of a wave 2 zone, no action required. Especially if you're buying for the first time, we're looking for price. Again, these are the retracement zones. We're not in that zone. We're looking at time. We're not in the time zone yet. This is not a clean enough and long enough correction for it to really. It's almost like it needs to get closure. It needs to get closure for this correction. And then once it's down here, boom, that's when we'll anticipate the next move to the upside. So take my free Fibonacci and Elliott Wave Masterclass. It's absolutely free. And at the end, if you like it, if you think actually it's going to add more skill sets to me, it's going to sharpen my axe. So when I'm looking at the charts, I can see more. I can see more information because I have more of a trained eye. Then buy the course. It's only £97 and 90% discount. It's ridiculous. It's so good. I'm telling you. Just straight feedback. But if you take the course, you'll see it for yourself. But like, subscribe, hit the bell notification. Let's finish on a quote. Today's quote is, it's an important one, actually. It's an important one. I want to read it. Right? The name of the chapter is, you must be in it to win it. This is a sports athlete, right? Let's see if you can guess who it is. I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed. Jordan, when he was 15, 16, he didn't make the team, right? Didn't make the team, and they got him to work, right? Even harder than Michael Jordan, one of the greatest athletes of all time, knew that failure is the secret to success. In the sense of, when you're playing the game, failure is always an option. You're not trying to fail. We're not trying to fail deliberately. We're not trying to give money back to the markets deliberately. We're not trying to be wrong deliberately. But there's always that. And even just understanding that we're playing a zero-sum game, that there's winners and losers, and you're not going to be right every single time. So that's why we're always looking to stack the probabilities in our favor. Stack them in our favor. Stack them in our favor. What else can we do to simplify things and get the probability in our favor, and then act with that edge consistently? And that's what I'm finding. Sometimes people find it difficult. They've got the edge. They see the information, but then they do the opposite. I'm feeling the FOMO gear. I'm feeling like I should buy. And then the opposite occurs. The markets are really down, suppressed, depressed, and people are panicking. And it's like, I don't want to touch it. I don't want to touch it. And I'm like, yeah, but the pattern states this is deeply undervalued right now. There's loads of projects deeply undervalued right now. And now might be the best time to buy and then hold. So when there is euphoria and optimism and over-optimism and panic buying, and you have already bought during the fear and pessimism, depression stage, all of a sudden your profits are going to be greater. But again, you have to do proper risk management and everything else. So like, subscribe, hit the bell notification, take my free Elliott Wave and Fibonacci Masterclass. Enjoy it. If you like it, get the course. By the way, if you buy the course, you get access to my private Telegram group. We've got an amazing growing community that everyone just helps each other. It's phenomenal. We do weekend workshops. I'm always looking to add more and more value. And we got a whole roadmap and plan of just a lot of good things in 2022. So if you want to join my private community, free masterclass, buy the course, and that's your ticket to get to the other side. All right, I will see you very soon. Have a good one.